Welcome to JK classes for revision lectures on accounting standards exclusively for IPCC and intermediate. We are going to do AS20, that is nothing but earning per share. Now basically it's just a financial ratio, but how this financial ratio is to be calculated, it's to be disclosed. So majority of you are aware with this formula, that is EPS is equal to net profit attributable, means belonging to equity shareholder divided by weighted average number of equity shares. Net profit attributable to equity shareholder divided by weighted average number of equity shares. That is nothing but the numerator part. Net profit attributable to equity shareholder. Now what will come under this? It's nothing but profits before tax. Whatever you have computed, that is your profits before tax. From that, of course, this profit should be as per accounting standard 5. Means you should have considered prior period item, ordinary, extraordinary, everything, recurring, non-recurring, everything has been considered as per AS5. Profits before tax less tax expense. Of course, this tax expense should be as per AS22, which we have already studied. Then we deduct preference dividend. We deduct corporate dividend tax, that is preference dividend के ऊपर tax, dividend distribution tax. So what we get is nothing but net profit available for equity shareholder. This is the amount of numerator. So numerator is here. Denominator means what? Weighted average number of equity shares. Means at any point of time the number of shares are not constant. Like on 1st of April I have 5,000 shares. On 1st of December I issue 3,000 shares. So if you look properly, the number of shares cannot be 8,000 which have been used during the whole year. The resources are with respect to 5,000 as well as 3,000. So what I do is, this 5,000 shares resources have been used for 12 months, whereas 3,000 shares, the resources have been used only for 4 months. So 750. I'm sorry, 1,000. 3,000 divided by 4 into so it is 1,000. So I have somewhere around 6,000. That is nothing but my denominator part. I have 6,000 shares. This is the basic computation of our EPS. What I would like to do is, instead of going for an example for this, I can directly go through our questions and answers and give you a reference to it. Okay, question number 21. I'll do simultaneously so that number of examples will be same. It will resemble to this. 1st April the balance is 1,500 shares. On 1st August there is issue of shares for cash. 600 shares have been issued. You have bought back 500 shares. So on 31st March your net profit is 275. Now if you look properly, can I say 1,500 shares? I'm just doing solution to question number 21. For me, weighted average number of equity shares. 1,500 equity shares I have there for 12 months. So 1,500 into 12 by 12. It is 1,500 shares. Then I have issued 600 shares on 1st of August. So 600 shares have been issued on 1st of August. Can I say August, September, October, November, December, January, February, March? 8 months. So it is nothing but effectively 400 shares. And there is a buyback which is happening on 31st March. Now if it is happening on the last day, there is no effect which is to be given. So this will be completely ignored. Had it been 1st of March, I would have put a negative. Yeah, I would have put a negative on it, that if it is 1st March, then 500 shares are not there for 1 month, so we need not worry. And this is 275, so 1900, your EPS will be 275,000 divided by 1900. Excuse me, 144.73. Let's go through the solution. The question number is 21. Yeah, so 1500 shares, 400, and total is 1900. Yeah, this is what we did here. I'm sorry, 1900. And basic earning per share is net profit, this divided by weighted average number of equity shares. Okay, the solution is missed out. Net profit, the net profit is 275, so 275 will be divided by 1900 shares. Clear? So 21 is done. I'll do 23 also, just pertaining to it. Profit before VRS, but after depreciation 75. Depreciation 10. VRS 32. Provision for taxation 10. Fringe benefit tax. This was one type of tax. If you give some benefits to your employees, on that benefits also you have to pay tax. Paid up equity share capital of 10 each. So can I say from 75, I will deduct this 32.10, I will deduct this 10, I will also deduct this 5. So whatever is left out, that will be divided by 9.3 crores. Because this is 93 crores 10. So number of shares is 9.3 crores. So you can just look at 23 solution. 75. Depreciation, no adjustment required. This is VRS is 32.10 as just provision for taxation 10, fringe benefit tax 5. So 40 and 27.90 and 9.3. So 3 rupees is your answer. I can go for the next question. Okay, they are all related to some new stuff. I will do another area, that if there is a bonus, then what is to be done? So the standard says that whenever there is a bonus, what we need to do is, the date of bonus becomes irrelevant because actually there is no resource. And we need to restate the EPS of previous year. Like in 2005-06, I have 5 lakhs earnings. In 2006-07, I have 6 lakhs earnings. Yeah. If you look at number of shares, it is 1 lakh, and here it is 3 lakhs. But this 3 lakhs includes bonus shares 2 lakh. It includes 2 lakh bonus shares. So what is to be done? If 2 lakh is the bonus shares which is included here, what are we supposed to do? It's very simple. First we'll find out basic EPS, which would have been found out for 5-6. So basic EPS would be 5 lakhs divided by 1 lakh. There is nothing but 5 rupees. Then what is the basic EPS for 6-7? There is nothing but 6 lakhs divided by 3 lakhs. It's 2. But we need not compare this and this because the effect of bonus is there. So we need to restate. Restated EPS for 5-6 or adjusted EPS. You will say as if the bonus was there right from the beginning. 5 lakh divided by 3 lakhs, which is 1.67 approx. So what do I mean by this is, whenever there is a bonus issue, the date is irrelevant. We will not give weighing factor 6 by 12 or 7 by 12. The reason, no resources were received by us in case of bonus. Moving on to the next area, that is right factor. Now what does the standard say is that in a right not factor, but I'll say rights issue. It says, what is the right? Basically, right is nothing but issuing shares to our existing shareholders, but at discounted price. Issuing shares to our existing shareholders at discounted price. So somewhere or the other, you are giving a benefit of bonus kind of stuff. So for the purpose of calculating EPS, whatever shares have been issued as right, we need to segregate it. Whatever shares we have issued as right, we need to segregate it. How many shares at full value and how many shares at without value or without consideration. That will be nothing but my bonus element. So if I'm issuing 5,000 shares, I have to find out for 5,000 shares, how much is as good as fresh issue and how much is bonus issue. Say 3,500 is fresh issue and 1,500 is bonus issue. That doesn't mean 1,500 we have given free of cost. We have given 5,000 shares at all shares have been given at some price. All shares have been given at some price. But that price is lower. So we are going on an equivalent way out. कि 5,000 शेयर का पूरा पैसा नहीं आया है, we got it discounted money, so we can say 3,500 shares का we have received full money and 1,500 shares we have received only partial amount. Okay, so how this rights issue? For that, there is something known as right factor which has to be found out. Right factor is nothing but fair value prior to right. This formula have been given by the AS. Theoretical X right price. Theoretical X right price means the price of the share after right is nothing but fair value prior to right multiplied by shares before right plus number of right shares issued multiply by exercise price divided by existing shares plus right shares. Then comes bonus element. Bonus element is nothing but existing shares into right factor minus existing shares. This will help us. This bonus element is nothing but this wala part. This can be found out in this manner. Out of this many shares, this is nothing but bonus element. For this, I need to just solve one question which will give you a better idea with respect, but these are the formula. Just memorize those formula here. Now, the following information, I'm on question number 24. Following information is available for Raja Limited for the accounting year 9-10 and 10-11. Net profit 25 lakhs, 10-11 40 lakhs. Number of share outstanding prior to right 12 lakhs. One new share for every 3 outstanding, matlab 4 lakh right shares. This is exercise price. This is nothing but last date. Fair value immediately prior to exercise is 28. Now what I have to do is, ये 4 lakh shares जो issue किया है rights में, how much is fresh issue, how much is bonus element, I have to find out. How much is fresh issue, how much is bonus element. So first let's do it here itself. What is the theoretical X right price? How to find out theoretical X right price? Very simple. Fair value prior to right. What is the fair value prior to right? 28 into number of shares prior to right. Number of shares 12 lakh. Plus amount received. The amount received is nothing but 22 into 4 lakhs divided by 12 lakhs plus 4 lakhs. Four crore 24 lakhs. Divided by 12 and 4, 16 lakhs. So I get something known as 26.5. Now, what is my right factor? Right factor is nothing but fair value prior to right divided by theoretical X right price. Fair value prior to right. What is your fair value prior to right? 28. So 28 divided by 26.5. 28 divided by 26.5. I get somewhere around 1.056603 and so on. So my bonus element will be 12 lakh shares into 1.056603 minus 12 lakh shares. So that is nothing but 67,925 approximately. So when I'm issuing 4 lakh shares, what I can say is ये जो 4 लाख shares issue कर रहा है उसमें से the bonus element is 67,925. Remaining 3 lakh is nothing but as good as fresh issue. 3,32,075 is nothing but my fresh issue. Now how EPS will be found out based on this? So I will have 3 EPS. First EPS of the previous year as it would have been calculated. Then current year EPS after giving into effect the rights and bonus, and the third is nothing but restated, because in this year if there is some bonus then of course I need to change the EPS of previous year. So 25 lakh था last year का profit. EPS for 910, 25 lakhs divided by 12 lakhs. 2.08. Now EPS for 1011, 40 lakhs. Just wait. This 12 lakh shares are there for all 12 months plus 332,075. 332,075. This I will multiply. When did I do fresh issue? The fresh issue 30th June, means can I say for 9 months? So 332,075 into 9 by 12 plus the bonus 67,925 into 3 by 12. Three 32,075 into 9 divided by 12. 60. Oh, I'm sorry for this. This will be 12 by 12. I'm sorry. Because bonus element है. ये bonus था, इसमें सिर्फ 12 by 12 आएगा. 67,925. It will be 12 by 12 only. Okay. So I have 40 lakhs divided by memory recall. So I get 2.63, something like this, 2.63. Then I need to give them restated EPS for 910. That is 25 lakh. 12 lakhs तो वैसे का वैसे 12 lakh shares into 12 by 12 plus ये bonus we will restate as if it has been done from the previous year in order to have a proper comparison. So 25 lakhs will be divided by 12 lakh 67,925. So I get something around 1.97. Yeah, we are doing 24th question. Solution to question number 24. First I found out the theoretical exercise price, then I found out the right factor, then bonus element. Yeah. So 2.08, 1.97, 2.64. Where is our answer? 2.08, 1.97 and 2.63. That is 2.64. Yeah, this is the solution done. Theoretical exercise price 1.06 is nothing but adjustment factor. This adjustment factor is also known as right factor, is also referred as bonus factor. Now coming on to the next area, that is diluted earning per share. Now till now what we were talking that you will be having earnings. Now the standard has also opened an area that in future these earnings may go down, all other things remaining constant, because you are sitting on something known as potential equity share. Potential equity shares means there is chance that some of your securities will become equity shares. Now this diluted earning per share can be in case of convertible debentures. I have convertible debentures. So if I have a convertible debenture, what will happen? Can I say that debentures will get converted into equity shares? So if the debentures get converted into equity shares, I'm not going to get new cash. So don't you think my denominator will increase in future? That's why it is going to reduce my earning to certain extent, if possible. So how to find out EPS and how to find out DPS? EPS simple, net profit attributable to equity shareholder divided by weighted average number of equity shares. That is your EPS. But your DEPS will be this way. This is same only, net profit attributable to equity shareholder divided by weighted average number of equity shares. That is same. But here I will add number of shares to be issued on conversion, number of shares to be issued on conversion of debentures. In future ये होने वाला है. And ऊपर क्या आएगा? Can I say post tax savings in debenture interest? Because if debentures get converted, I don't have to pay interest. If I don't have to pay interest, can I say my profit will increase? My profit will increase, so there will be increase in tax also. So hence post tax saving in interest and dividend distribution tax, both the things will be there. Yeah, so that is nothing but for a convertible debenture. If you have a convertible, I'm sorry, as far as convertible debenture is concerned, this DDT will not be there. Extremely sorry. Just remove that DDT. Convertible debenture, no concept of DDT. It is for preference shares only. So I wanted to make a single formula, but I'll go for different formula. If it is convertible preference shares, can I say my DEPS will be nothing but net profit attributable to equity shareholder divided by weighted average number of equity shares plus what plus preference dividend and dividend distribution tax. Yeah, dividend distribution tax will be here. And here, number of shares issued on conversion of preference shares. Then we go on to the last kind of potential dilutive shares is options, stock options. You have given options to your employees that you can buy our shares, and now when they buy their shares, they will not buy at market price, they will buy at a price which is lower than the market price. Now if it is lower than the market price, what is to be done for stock options? So can I say in case of stock options, very simple, the DEPS, that is diluted earning per share, is equal to net profit attributable to equity shareholder, that is there, divided by weighted average number of equity shares, plus nothing will come here, nothing, and equivalent number of equity share for which no resource received. Like, I'm issuing 10,000 shares to my employees. The market price of my share is 50 rupees. They are going to buy it at 25 rupees. Market price is 50, they are going to buy at 25 rupees. What I will say is, I'll say 10,000 options जो दिया है, out of 10,000 options, 5,000 options are given at full value, that is पूरा पैसा आया, and 5,000 options are given at no value, free of cost. So here I am going to write down only those number of options for which no money is, see, you are going to receive money for every options, every stock options. But we are writing only that equivalent number of options for which no consideration is received, for which no resource received, or I can say no consideration is received. I'm going to write that only. Now some of you will think, okay, sir, if you have all three of them, then what to do? Yes, that is to be studied at final. Here we don't have, there is something known as ranking system. So that is done at CA final level. So we just restrict ourselves to each of them on individual basis. Now coming on to the questions and answers now. Now, the first, net profit 24 lakhs, weighted average number of equity shares 10 lakhs, average fair value of the equity shares 25, weighted average number of equity shares 2 lakh, exercise price 20, basic and diluted. So can I say this is nothing but a question based on options. How should options be taken care of? This question is totally based on option part. Yeah. So the net profit for 2012 is 24 lakhs. So can I say for 2012 I can find out what is my EPS? 24 lakhs divided by 10 lakhs, that is nothing but 2.4. Now diluted EPS, how to find out diluted EPS? Diluted EPS, I'll say, sir, there are 2 lakh shares under options. Market price 25 hai. I'm only going to get 20. Matlab, what is the equivalent number of shares? So I can say the simple 2 lakhs into 20 divided by 25. So 2 lakh into 20 divided by 25 means I could have issued 1,60,000 shares to get this resource. Sirf 1,60,000 shares issue karta tha, so this much amount would have been received. But I have been issuing 2 lakhs. So I can say it means 40,000 shares are issued as free of cost. 2 lakh option issued at 20 rupees, the market price of which is 25, means that 1,60,000 shares have been issued at market price and all remaining shares have been issued free of cost. So what I will do is 24 lakhs plus dash, 24 lakhs plus dash divided by weighted average number of equity shares. कितना weighted average number of equity shares? 10 lakh plus कितना weighted average number of equity shares? 10 lakh plus 40,000. Yeah. So this is my solution. Hmm. 24 by 10, that is 2.40, that is basic earning per share. Dilution, that will be nothing but 24 lakhs is 24 lakhs only. So this 160, that is nothing but 10 lakh 40. If you remember, this is where I found out your answer. 40,000. So weighted average number of equity shares 10 lakh plus 40. 10 lakh 40, those 2.31. A Limited issued 18 lakh equity shares of 10 each. 5 per share was called up on that date, which was paid by all the shareholders. The remaining 5 was called on 1/9/2010. All shareholders except one having 360 shares paid the sum in 2010. The net profit for the year is 33 lakhs after dividend on preference shares and dividend distribution tax of 6.60. Compute basic EPS as per AS 20. I think very simple. We just have to find out. See, when the shares are partly paid up, convert those partly paid up equity shares into equivalent number of fully paid up equity shares. Convert that partly paid up equity shares into equivalent number of fully paid up equity shares. So how to convert that partly paid up equity shares into equivalent number of fully paid up equity shares? So very simple for us. You can say 18 lakh shares. So that 18 lakh shares of 5 each, that is nothing but 9 lakh shares are there for whole year. Now what is happening is you are asking for remaining on 1/9/2010. So if you look properly, I can say 18 lakh shares. For in April 18 lakhs 5, the remaining 5 was on 1/9. So from 1st of April to 31st of August, you have 18 lakh shares of rupees 10 each, 5 paid up. And here from 1st of September, you say 18 lakh shares of rupees 10 each, 10 paid up. But this may be वापस problem है. What is the problem? The person who is having 360, he didn't pay. Paid the sum in September to all shareholders except having this paid the sum in September. So I can just make this instead of 31st of March, 30th of September, and from 1st of October. So there is a guy who is having 3,60,000 shares of rupees 10, paid up 5, and there are 14,40,000 shares of rupees 10. Paid up is also 10. So here is concern, I can say you have 9 lakh shares which are there for all 6 months because 30th September को ही पैसा आया है. 1st September we have called, but 30th. So 9 lakh shares for 6 months, which is nothing but 4,50,000. Here 14,40,000 is 10 rupees only, so 1440 into 6 by 12, 7,20,000. And here 360, I'll say 360 का आधा. Why? Because 5 रुपए ही paid up है. 1,80,000 into 6 by 12, that is nothing but 90,000. So my total is nothing but 450 plus 90 plus 720. 12,60,000 is my weighted average number of equity shares. I have made an assumption here that monies are received at end of September. If this is the assumption, then this is the answer. My total, this will be 12,60,000. But if I make an assumption that this money is, because they just use the word in September, so paid in September when? 1st of September or last of September? I say monies are received at end of September. It means this 18 lakh shares are there for 6 months. Here also I did the bifurcation. But if I take an assumption, no sir, it is not that way. The money is received at the beginning. So again, I will bifurcate this 18 lakhs for 5 months and the balance 18 lakhs, not balance, but the remaining 7 months. Here I will say 18 lakhs, that is nothing but 9 lakh into 5 by 12. Why 9 lakh? Because 18 lakhs, 10 rupees ka share, 5 rupees is paid up. So 9 lakh divided by 12 into 5, which is nothing but 3,75,000 shares. Here again 18 lakhs, 2 bifurcation will come, 3,60,000. Of course this is 10 rupiah, 5 paid up, so I'll say 1,80,000 into 7 by 12, and here 14,40,000. 1440 into 7 by 12. So 14,40,000 into 7 divided by 12, 8,40,000, and then 1,80,000 into 7 divided by 12, 1,05,000. If I do the total, 375 plus 1,05,000 plus 8,40,000. I get 13,20,000. Yeah. So this alternative option alternative solution is also there. Alternative solution, assumption that the money is received, monies are received at beginning of September. Yeah, so the solution which you have here is based on that assumption that monies are received at beginning of September, that is 13/20. Let's proceed for the next question then. Diluted earning per share. While calculating diluted earning per share, effect is given to all dilutive potential equity share outstanding during the explain. So what is diluted earning per share? We should just explain what is diluted earning per share. Also calculate diluted earning per share from the information given below. So first of all, we will find out what is earning per share. So what is your earning per share? 1850 divided by 20 lakhs. That will be your EPS. What net profit for current year? They have given 6 lakhs. Of course, this net profit is after. Net profit for current year is 8550 divided by 20 lakhs. You will get EPS. Then each debenture is convertible into 10 equity shares. So the number of debenture is 1 lakh. Number of equity shares will be 10 lakhs, and the savings will be 6 lakhs. 6 lakhs ka 70%. Why 6 lakh 70%? Because 30% is tax rate. So my answer would be 8550 plus 6 lakh 70%, that is nothing but 4,20,000 divided by, already I am having how many shares? 20 lakh shares, plus I will be issuing how many shares? 10 lakh shares. These are nothing but potential equity shares. Debentures convert ho jayega, so I will have to give 10 lakh shares. This is how it is. So here the solution lies to problem number 20th. First 8580 Yeah, so they have taken it assumed to be after tax. The assumption what I made here was 8580 is always after tax. They have taken here it assumed to be after tax 8580, so they added back 6 lakhs, tax relating to interest 180, adjusted net profit is 8970. Yeah, so 8550 plus 4,20,000, nothing but 8970. This is our 8970. Don't get worried about the solution which is given by ICI. Same thing, 8970, and this will be divided by what? Diluted earning per share, number of shares. Now, if you look properly, there is a small hint here in this question. Normally we say this is 10 lakhs. Normally that is 10 lakhs only. Yeah. But this interest expense is 6 lakhs. If I verify with the debentures, that is 1 lakh into 100, that is 10 lakh, uska 8% if I give, it is 8 lakhs. That is 8 lakhs. Then interest paid by me is only 6 lakhs. So if interest paid by me is only 6 lakh, it means debentures have been issued during the year. So when I go for conversion, because then when I'm reducing this 420, when I'm going for this 420, if you look 420 is for some period. So but obvious, this 10 lakhs has to be adjusted for that period. Nothing but we can say it is for 9 months, because 6 lakhs is an interest for 9 months. This is how the solution has been taken care of. 10 lakh into 9 by 12. The reason my numerator has been adjusted for 9 months, so my denominator will also be adjusted for 9 months. So the diluted earning per share comes to 3.26. Let's move to the next question then. 21 we have already completed. 22, Ram has 12 lakh equity shares, company under profit of 30 lakhs during the year. The average fair value of the share is 25. The company is giving an option 2 lakh at an option price of 15. So first of all, my EPS, can I say EPS is nothing but 30 lakhs divided by 12 lakhs, that is my EPS. My DEPS, so out of this 2 lakhs I have to find out 2 lakhs equity shares. I'm issuing at 15 divided by 25. So 2 lakh into 15 divided by 25, I could have issued 1,20,000 shares only. मुझे सिर्फ 1,20,000 शेयर इश्यू करना था, but I'm issuing 2 lakhs. Means can I say 80,000 shares are dilutive? They are potential equity shares. So my denominator will be EPS के लिए ये हो जाएगा, DEPS के लिए 30 divided by 12 plus 80,000. Yeah, the solution has been done in a better way here. Net profit 30 divided by 12, so you get EPS which is 2.5. Dilutive 30 plus 80,000. Yeah, earnings is 30 only रहेगा. $30 will remain 30 only, 12 existing shares, and these are dilutives. Okay, so here it is 1282.34. 23rd we have already done. 24th also already done. 25th. XYZ had issued 30,000 convertible debentures of 100 each. On 1st April, the debentures are due for redemption on 1st of March. The terms of issues of debentures provided they are redeemable at a premium of 5%, and also confirmed an option to debenture holder to convert 20% of their holding into equity shares. at a price of 15. Debenture holders holding 2500 did not exercise the option. Calculate the number of equity shares to be allotted to debenture holders exercising the option to the maximum. Very much simple for you. You have issued 30,000 debentures. So if you have issued 30,000 debentures, they are due on redemption at a premium of 5%. It means 30,000 into 105, 20% of them option to debenture holders to convert 20%. So 20% people are having an option. So 30,000 into 105, uska 20%. 2,500 people didn't exercise the option only. So can I say what I will be having is 30,000 minus 2,500, 27,500 into 105. This are the people uska 20% they can convert. So the amount which can be converted is 577,500 divided by the value of per share 15. So 38,500. 38,500. Yeah, so what did I do? 30,000, 2,500 did not exercise. So I'm left out with 27,500. 20% are converging. So it's 5,500 into 105, that is 577,500 divided by the market price of my share 15, that is 38,500 shares is the answer for this. Okay, so we end here our AS20.